What's going on, everyone? Shalon Winter here, and time for a trade recap. This one's going to be for Wednesday, July 16th. And I really wanted to do this recap because I want to show when and how to tell the market when the market is probably not going to give you too much or not going to offer much. Kind of where you need to set your expectations on your trading. Okay. So let's jump right in here real quick on this daily chart. If we're looking here, look at this daily chart. Okay. Obviously we're going up. We're going up, but when you see, I just want to point this out right here. When you see areas like this on the daily chart, just look at this right here. That's not very good. Like here, we're expanding, right? We're expanding up, little pullback into this fair value gap, created a weekly fair value gap here, okay? Expanded up higher. But then look at that. Since then, we're just staying in this zone, this range, this area. And what is this doing on the daily chart? We're accumulating. Right? If you look, this is a zone of accumulation. Okay. And whenever the market does this, if you look at each day after this candle, so let's look at this like 1, 2, 3, 4, 5, 6, the last 7 days basically. Let's take a look at this range here. If you measure the high and the low, here we have 248 points, the full range for that day. This day, you have 164. This day, looks like it's probably going to be a little more, right? But if you measure it, the complete high and low, 268. And then this day stayed inside 100, less than 200. So we're like around 200 points a day. This day, yeah, it kind of expanded higher. Oops, I keep clicking here. This day, if you look, we're at a little higher. But a lot of the days around 200 points, maybe 250, maybe a little less. But then when you're looking at days like these moves, right, this is a little more clear. And this is how the market works, right? So if you trade in Q and you've traded it for a little while, you might have picked up on that. There's times where you might go 2, 3, 4 weeks in a row with some pretty good price action. And then you might get another week or two where you're like, man, its price action is just not good. And that might be if you go back and look at your daily charts when you're in areas like this, right? So if you can identify this, then you know you can what you can anticipate, right? So when we get in these type of moves and you start seeing bars like this, well, then you can start anticipating bigger moves. So like my trades, I typically I like going for anywhere from 35 to say 65 points on my winning trades. Sometimes I've gotten 70, 80 point wins, even as high as just about 100 points. That's about my move. But normally 35 to 60 points, I'm happy. I prefer 50 to 60, right? Of course. But you got to know what kind of environment you're in. When you're in this type of environment, right here that I just pointed out, and the entire day is ranging around roughly 200 points a day, why should I feel like, even if I have a beautiful, wonderful setup to go long somewhere, like what makes me feel like, yeah, let me try to get 60, 70, 80, 100 points out of this. If the entire, that's basically saying I need to catch the move here and hold it at least a third to a half of the entire day's range. I'm not saying it's impossible, but why not set my expectation to where if my normal minimum profit amount that I prefer is around about 35 points, I want to be in that range. And I know this right here that I'm telling you, why don't I just be happy with setting the first lowest hanging fruit target and just get out? Take my profit. If I do catch, let's say, an entry somewhere, it's looking good. Let's just take my profit in this 35 to 40 point range or so zone, 30 to 40 even, because it's not expanding much. So why don't I just take my profit? Because even if it does continue up, we know, especially when this is the daily chart, especially when you drop on the lower time frames, it looks like this, right? Looks something like that. So why would you want to take a trade and you're going long? And even if it does go, why do you want to sit there and experience a big pullback just to keep going up a little bit further to where maybe your profit is? That's just my thinking behind it. But yeah, so I want to show that. So you have to have the right mindset, the right state of mind going into the day and know kind of what it is, right? So like here on the daily, I could be like, before this day started, well, this is a big bullish candle, right? We're going to run up and keep making new all-time highs and keep going. Where, yeah, that's possible. However, we know these are new all-time highs, right? So, and I know we have a lot of sell-side liquidity in a lot of places and even lower. So it is possible for it to keep running up, but I have to be under the mindset of it could look to do like a buy stop run before maybe coming down and taking some sell-side liquidity. So if I have that thinking that that's a possibility, then I have to watch out and be aware for moves that do a basically sweep, right? And then come down. I have to be aware and cautious of these fake outs, so you would call them, right? And look, today, price open here, kind of pulled down a little bit, ran all the way up, and look where it closed. So you have to be cautious of that. You just have to. You can't just think we're going to keep running forever. You just can't. All right. So then here's another telltale, well, let's drop down to the 4 hour, right? So, hold on. Let me go and mark out the previous day high and low right here real quick. And I have these swings marked out, these daily swings. Previous day high and low. So you can see we made this run above the previous day high. Then let me go to this 4 hour chart. This is another thing I was looking at. Okay. On the 4 hour chart, we had, let's see. Oh, I need to get out of replay here. Yeah, here we go. Wednesday, there we go. So on the 4 hour chart here, we had, if you look, a bearish 4 hour fair value gap. And look what we had right here. A bullish 4 hour fair value gap. So this right here, immediately when I drop down to the 4 hour chart, I look at this like, because you got to think, there's 10 a.m. This is what we looked like when I came on to analyze my charts. I'm like, well, and this bar wasn't even this low yet because this bar closes at 10 a.m., right? So it was up here in this area. But I'm looking at it like, okay, we made this run up. Now we created a bearish fair value gap here into this bullish one, which this bullish one, we ran all these highs, basically displacing up on the 4 hour chart. So now it's like when we came down here, do we use this and continue down? Well, it's a possibility because we're sweeping previous day high. Or does this bullish one here hold as a, displacement up and pull back into here and continue up? Like, what happens? They're two fairly fresh 4-hour fair value gaps contradicting each other. So that right there is a sign of I'm staying out of the market at that moment until the market shows its hand and tells me, where do we want to go from here? Because, think about it. Why would I want to, if price is here, or let's say back here, right? Pulled back up into this one, and it's coming down. Why would I want to short right here when it hasn't proved that it can really continue to go down? Not yet, anyways. And the same thing, when we come back into here, why do I want to go long when we just created this brand new, fresh 4-hour fair value gap here? Like, personally, I'm going to wait to see which way the market decides to go. Okay? So that right there is already an indicator for me to be very cautious today. Not only is price not expanding very much every day, it's now got contradicting imbalances on a 4-hour chart. So I'm like, all right, that's not very good. Let's drop down to the 1 hour. So I dropped down to this 1 hour. Let's see, what's the time here? 9 a.m. So again, this is before this bar closed. So we're looking pretty much like this, 8 a.m. to 9 a.m. in between, right? So price is pretty much right here. So at the same time, I'm like, okay, here's this gapping here, 2 1-hour fair value gaps. I don't mark it because I already have a 4-hour there, 4-hour fair value gap. So it's kind of like, eh. And then right here, we have a little bitty, like 1-hour fair value gap here as well. I don't really hold too much weight into that one because look how small it is. So it's kind of like, I just kind of remember it. But at the same time, we have this little one over here. Then we have this new weak opening gap over here. So I'm kind of like, man, we're in a spot right now where it's not the easiest to tell. So also, whenever that happens on the higher time frames like this, on the 4-hour, the 1 hour, that's when I really have to rely on my lower time frame and just look for that smaller window. And you'll see what I mean here in a minute. All right, so we pulled up because you could argue right now, like, okay, we might be bullish because, right, we came up, down. Yes, we came down and took these lows here, but is that just internal range liquidity we're trying to take? And then we pulled up, back, took these highs. You have basically a breaker here, bullish breaker, and what looks like maybe if this bar closes up, a 1 hour bullish fair value gap. So does that mean we're going to just go ahead and trade like this? Well, maybe, but these are things you have to watch in anticipation, right? When you're framing it out in the morning. So now I got to wait, but then let's just jump to the next bar real quick. Next bar opens and wham, didn't happen. Okay. But we don't know that yet. So I'm going to jump. We're going to go down to the 15-minute chart real quick because we don't know this part yet. Okay. So pretend like you didn't see that because see, that's 10 a.m. already. All right. So let's go back here at this area. So of course, when I'm doing my framework, and remember, I created that framework video so that way you can know how I do my framework. So I don't have to bore you with telling you how I do my framework every single time that I do a trade recap, right? But what I noticed is we have this big fair value gap right here. 8:30, we did have some news. So that's a news 8:30, right? So we have that. And I want to zoom out here and just visualize. What does this look like? What's it telling me? We can say there's a high point up here, a low point here, right? So we kind of have like a big dealing range right here. But if you glance and look, the 15 minutes is where I get everything. This is where I spend most of my time on. Sell side liquidity here, relative equal lows. Okay. Then we have this pullback right here in fair value gap. Okay. I noticed that. I immediately look here. Okay. That's internal range liquidity. But what happened? Price already ran through this. So that's not important. So, okay. Price ran down here. Pulled back up. And this is now the lowest point. All right. Cool. Let's look at that. Let's see real quick. I want to see from this high point down to this low point what this looks like in 4 quadrants. Okay, here's equilibrium right here, this purple. Okay, it's in a discount here. This is the previous day high right here. It's bouncing off of. Okay, this might actually even be like a 70.5% OTE area right here. Okay. But I don't really get too concerned into that. I really don't dive in too much there. But I'm just looking at what's obvious. Okay, so then, all right, I got this down here. That's sell side. I don't know that price is really going to expand that far today because it hasn't been. So now let's go here and let's just basically look at from here to the right. Because now I have a high point and I have a low point here. Okay, so I can look at this as a bit of a dealing range. Immediately what I notice is this is jagged, which means we have a move down here. And then this area is smooth. So I'm like, okay, that might be an area that price might want to run up to with some relative equal highs right here. We do have, again, this 15-minute fair value gap. It's okay, I'm going to mark that. But we really don't have too much of a reason to go down just looking at this here, okay? Obviously, there is more reason that I just showed that sell side down there to go down, right? There is reason. But then if I throw this on here, you can see we have our London low here and a pre-market low there, okay? So I just want to note this is a London low. So that is a level that I do look at to get taken. So we have a London low. Okay, London low. Now I'm like, all right, cool. Well, potentially, I don't know that price is going to really run all the way down here. It might, but I don't know that it will. And we'll see what happens with this 15-minute fair value gap. And again, like I said, we are in between these 2 4-hour gaps, a bullish one and bearish one. And then, of course, there's a big 15-minute gap here as well. But I don't mark that again because I already have a 4-hour one here. So I'm like, all right. Do we kind of maybe push down into here a little bit, maybe hit this 4-hour gap and then continue up and take this buy side liquidity here? Maybe. So what I'm looking at this point is one of 2 things. Do we open and do like a move down into this 15-minute fair value gap or wick down to this 4-hour one and then come up and run this buy side liquidity there? Okay. If that doesn't happen, do we instead run through this 4-hour fair value gap and want to take London low? And if we do end up trading down through this 4-hour fair value gap, well, maybe we just keep going down and just start attacking all that sell side liquidity that we had much lower. So I'm looking at that as my 2 possibilities, which you see that's down here. My 2 possibilities. So now that's what I'm waiting for when the market opens. Okay, so let's go ahead and drop to the 1 minute here. So now I know what I'm looking at, and I'm going to go to the 1 minute. And we open. Let's see, what time is this? 9:29. So we're just going to jump forward. We open, and you see we dip down. So, okay, we dip down. We have a big volume balance here. Dip down, perfectly okay. Hit that 4-hour gap right here. Fair value gap, trade through. Now I'm like, all right, what are we going to do from here? Okay, well, it just took off and went straight down. So now I'm thinking to myself, there's a chance that I want to see what price does down here, but there's a chance that price, now that we're trading straight down through here, that we may not see it run all the way up there yet. We might not. That's what I'm thinking. So when it comes down and it trades like this, let's get to 10 a.m. So this is where I'm like, all right, why would price draw down here and why would it stop here? Like, what's going on? So let's go back to the 15-minute chart. And you can see what happened here is we immediately traded down and created an inversion of this 15-minute fair value gap and created a new one. So let me just move this over here to the new one. So we created this new one. So I'm like, ooh, okay. And we traded down. Now I'm like looking at this wick right here as a potential rejection block. Because you can see how it ran all the way down to that point right here, previous day that I mentioned, and closed up and went away from it. So now I mark it as a potential rejection block because I want to see what happens when price comes right back to it. Does it reject? Does it go up? What does it do? Because if it rejects here, then what could end up happening is we could see it pull back to this 15-minute fair value gap here. And then at that point, depending on what happens here, it can either just continue down, or if it inverts this one, then we'll run up all the way to that buy side liquidity. So I'm like, man, if it rejects inside this rejection block and creates a 9 a.m. candle low and gives me a clean setup to go long, I might just go long off this area right back up to this 15-minute fair value gap. That's a pretty good setup for me. So now let me go back to the 1 hour real quick. We have that 1 hour candle closed down. So this is where I went ahead and marked the 9 a.m. low right here. Okay, so let me just write that in, 9 a.m. low, the 9 a.m. candle, okay? And then go back to the 1 minute. So if you can see, we hit that 9 a.m. candle right here, and I'm watching it. I'm watching to see this area, if we're going to reject or if we are going to keep trading down. So as soon as we keep fast forwarding, look at this right here. You see how we're hitting that rejection block? Pulled back up here, and then this candle shot right down below the 9 a.m. low there into that rejection block. Fast forward, and look at this candle right here. So you created this fair value gap when it shot down, and then immediately came back up and inverted it. So now I'm looking at this like, okay, this is probably going to be a bullish order block. So I want to mark this as a bullish order block here. And I see this inversion. So I'm like, yeah. And then at the same time at that 10 a.m., that's when we got this 15-minute bearish fair value gap here. So in my mind, I'm like, we're going long. We're going right up to that. So I'm going to long this inversion right here. And that's what I did. Well, I pretty much as soon as we went up above this candle and I'm convinced that it's an order block, that's when I went long. So you can see the next one. Boom, right here, I went long. I didn't even wait for a fair value gap to form, pull back, nothing. I just went long. And then you can see shot straight up. And then it did pull back on me, though. It did pull back before, because there was a 5-minute fair value gap here as well. So it did pull back before continuing, but look where it pulled back to. This is how you know that it's valid. Right to the midpoint of this order block. So that's why when I got in, I put my stop right here at this low, and I'm I'm okay if price comes up and pulls back here, because until it takes this low, my trade is still good. Once it takes this low, then my trade's invalidated, my trade idea. And that's when I want out. And that's why I put my stop there. As long as it doesn't hit this, my trade is not invalidated. I don't care that it created this bearish fair value gap. And I don't care that it inverted this one. Because this is the area that I like. And this is the order block that I like. that I believe price is not going to go below. And as you can see, it did not. So that's my thinking behind that. And then, of course, from there, we have the rest. So before I go further, I want to go ahead and pull up the actual trade of me trading it. Here's the video. And you can see right here is where it pulled up. And I will, as I always do on my videos, fast forward a little bit because I don't want to bore you with just watching. So as you can see, I was waiting for this candle right here to confirm that it went above this, and it did. And I'm like, yep, I'm in. Then I go ahead and pull my stuff over and pull my stop up. And I only had like a 28-point stop on this one. All right, so now let's fast forward a little bit. As you can see, I have a 5-minute gap here marked in that 1 minute. And this is below the previous day low here. Right? So this is below. We're basically sweeping previous day low at this point. All right, so let's fast forward. And I kind of zoom in a little bit here. We inverted this. So I'm like, okay, cool. Yeah, do we want trades to pull back on us? No. But like I said, until that trade is invalidated, I'm fully expecting price can do what it can do. Like price can pull back anywhere in this area, and I'm okay with it as long as they don't pull back under there. And that's exactly why I have my stop there. So now I'm going to fast forward. You can see it pulling back here. And what I could have done is waited for price to come back and hit this order block and get in there. Or where's the midpoint? Right here. I could have waited for an entry right here and avoided this whole pullback. I mean, I could have, but then at the same time, I'm risking this running away and not pulling back because I've had that happen too. So days whenever I'm very, 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 very confident in my setup, I'll just get in because I don't want to miss the move. And I'm very confident. I'll just get in. I'll have my target. And if it pulls back, whatever, I don't care as long as my trade is not invalidated. And if I lose, I lose. But I only do this whenever I'm very confident. Otherwise, I do wait for that pullback. So in this case, like I said, I could have waited, but I didn't. But now, once we are pushing back up and we take this high right here, right here. At this point, now price should not take this low. My trade idea is still valid as long as this low is intact. And technically, I could have moved up my stop to this low to reduce my exposure some. I didn't though, because I didn't love the way the price delivering. So I wanted to give it as much room as I possibly could because you'll see it does actually pull back again. Not that far, but it pulled back again. Where into this one, this fair value gap. So do I love that? No. Nobody loves the pullbacks. But now as it's coming back up, same thing. My trade idea is valid as long as they don't take this low right here. So I could have pulled up to break even, at least. But at the same time, I'm not up a very large amount. Yes, I'm up like 30 points. But price easily could have pulled back and gave it one more shot here before going up. That's a very possible scenario. So in that case, I don't want it to break me even. I'd rather keep my stop here because I'm in a good position. It's within my money management. And now I'm giving myself the best opportunity because it has to take this swing, has to take this swing, and then it has to take this swing. A lot to happen. Invert this. Trade through. I have so many barriers that it's very unlikely to come down and hit my stop before it comes up here. Just very unlikely. And if it does, then hey, I have to live with it. And I would not be mad at all because I'm like, it just happened. Maybe Trump tweeted or something. I don't know. So that, and then we'll fast forward. Fast forwarded it right when it popped up and hit my target. So yeah, popped up, hit my target. Actually, I closed it early because I was like, yeah, it's being very, very hesitant. Uh, so I went ahead and just closed it because I didn't love the price action. But still, you can see here on my P&L made about 7,700, about $745 on my live account. It was a great day. It was a great day. So, yep, there it is. There's my trade. There's my recap. Hope you got something from this one. And yeah, we'll see you on the next one. As always, trade well, everybody.